Welcome aboard Friday's market wrap up here at TOPGUN Options. Matthew Buckley, call sign Wiz, and what a volatile week of trading, folks. Been interesting. We had blowout earnings from Facebook. I'm not going to call it Meta. I refuse to call it Meta. And a big miss with Microsoft. Microsoft is getting MSFT. Microsoft is getting destroyed. Look at that, man. 2-year chart. Look at this. Wow. That hammered, absolutely hammered. Well, guess what? Stocks go up for a reason. Stocks go down for a reason. Let's get back to the S&P 500. So a couple of weeks ago, I opened and closed a bearish double vertical on the S&P 500. It's a position that I call a trade. What's that? It's a trade. I don't place a trade unless I'm pretty damn sure it's going to make money, but it also serves as a hedge to protect my long-term bullish position. So we put that trade on right about here. A couple days later, market imploded all the way down to this 50-day moving average. I got out of it, man. When you get a violent move in the direction of a double vertical, you close it. So I closed at 95, 98% profit. Didn't put another one on because we had this nice rebound, but here we go again. And as you can see, these oscillations are getting tighter, 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 and more violent. That can be the sign of a top. So join me next week for 3 free days, complimentary on me, of live trading in our full throttle program. Head to go.topgunoptions.com/full-throttle. And I'm going to show you an S&P 500 bearish trade, a trade that acts like a hedge. Okay. So February seasonally is usually a train wreck, folks. So I probably should have put another one of those on. But the main reason I didn't is because next week we get Amazon earnings. Remember, once earnings are out, it's out. We're already done talking about Meta. We're done talking about Microsoft and Apple. Now all eyes are on the Death Star, Amazon, and how they're going to report. Amazon crushes it. We're going to see a rip your face off rally. Amazon swings and a miss. We're going to implode, I guarantee you. So we're going to be ready. Make sure you come next week. Make sure you register even if you can't attend, and I'll get you access to the replay, okay? Couple of things I wanted to cover, and then I want to show you a long-term bullish trade on JP Morgan, ladies and gentlemen. But real quick, this is bullish. Kevin Warsh, the president, announced it this morning. He's going to be the Fed chair nominee. The guy's a dove. Free money, free crack. Market's ripping higher this year, folks. If this guy gets confirmed, it's going to be, I can't wait to see Elizabeth Warren and Democrats try and rip this guy to shreds, or maybe they will rip him to shreds, because anybody who Trump appointed is, it could be Jesus, and they're going to rip him to shreds. So get ready for some theater here. All I care about is he's a dove, he's an easy money guy, and we're going to rip, or we should rip. But let me talk to you about, this was a gift. I told you last week a couple times, I said, sell the wife and kids, mortgage the house, and get bullish on JP Morgan. Absolutely crushed in earnings. Let's go. And what did I tell you last week? Let's pull up JP Morgan on this chart. Take a look at JP Morgan. I said, let's, 2-year chart. Look at this, folks. 1-year chart. Look at this. 300, 297 and a half. I guess a better chart's over here. Let's look at this one. 297 and a half, folks, right here. Let's just round up and say 300. But 297 and a half, I told you last week, was what? A triple bottom. 1, 2, 3. Almost 4. 5. Folks, it bounces off 297 and a half, 300. What did it do last week? It hit 297 and a half, and it got up all the way. You made $10. You made $10 in JP Morgan if you bought it last week when I told you to. Now, here's what I want to do. I'm going to give you a gift right now because I'm in a good mood. Made a lot of good money this week. We made over $4,000 on 2 S&P 500 sniper shots. Men lie, trades don't. Over here in the Hunter's Trade Alerts, you can go look at it, all our new trades. There was that one. Boom, look at that. Out, 85% profit, $1,200, man. And then where's this one? Another one for, look at that. Boom, 100% profit in that one, $2,300. There was another one. Folks, I right there with a couple S&P 500 trades, I paid for, what's that? A year and a half of full throttle membership. So make sure you come next week and I'll show you all this stuff. But here's what I'm getting at here. JP Morgan. I'm going to show you a tactic called synthetic stock. Check this out. Wiz, I'm listening to you, man. I should have bought JP Morgan last week at 297.5. I'm going to do it today. I'm going to buy 100 shares of JP Morgan. Man, God bless you. You got $30,000 sitting around. Well, if you do, I'm still going to tell you this. Idiots buy stock. Why would you buy the cow when you can get the milk for free? This is over $30,000. I'm going to show you how you can get long-term bullish on JP Morgan using options for a fraction of the price. Here we go. So I'm going to click on options. I'm going to hop in my time machine and go all the way out to December of 2028. Why? That's as far out into the future as I can go on this options chain. We are right around $304. Let's go down and look at the strikes. There's a 300 and there's a 310. Tie goes to the runner. I'm going to go in the money here. If I am bullish on JP Morgan, I could buy one options contract at 300. Buying one options contract gives me what? Control over 100 shares of stock. So right now, ladies and gentlemen, would you rather spend $30,400 or $6,100? Okay, so I just saved you, what's that, 25 grand? I'm not done yet. If you don't know this, let me step you through it. Buying a call option is bullish. Buying one JP Morgan 300 call, I'm controlling 100 shares of stock years into the future, right? A call buyer is bullish. Now, somebody on the other side of this trade sold me that call. They are bearish. Now let's move over to puts. You've probably heard somebody say, if you're new to options, like, oh, the market's going to implode, I'm going to buy some puts. Buying a put is bearish. Again, somebody's on the other side of that trade. Somebody sells that put to you. That's the insurance company. They're going to collect some premium. They don't think, hopefully, your car is going to crash or the stock's going to go down. So a put seller is bullish. Buying a put, bearish, selling it. So check this out. I'm going to sell one D's 28, same expiration, 300 put. I am controlling 100 shares of JP Morgan stock years into the future for what? Say it with me right now. $1,700. Why would you pay $30,400? Now, you heard me call this tactic synthetic stock. I'm not buying the actual shares. I'm synthetically long the stock. Look at this picture. That's long stock. That's the options position. What does the word synthetic stock mean? Synthetic means, since you don't own the shares, you don't get two things, and I don't care about these two things. The first thing you don't get is a dividend. Does JP Morgan have a dividend? I don't even care. Dividend, 1.96%, folks. I can find that in my couch. So in this type of trade, controlling 100 shares of stock, you don't get a dividend. I don't care. The second thing you don't get, since you don't own the shares, is the right to vote. Last time I checked, Jamie Dimon probably owns a couple more shares than your 100 shares. So not getting to vote, not getting a dividend doesn't mean anything to me. Why would you spend 30 grand to do this? That's stupid. Now, let's analyze some risk real quick. Whoa, Wiz, you're risking 31.7, which is about what I'm risking what? If I bought 100 shares. Ladies and gentlemen, what's the max potential loss if you just bought 100 shares of JP Morgan? It goes to zero and you lose your 30,400. Ladies and gentlemen, what's the probability for maximum loss? It's Mr. Blutarski's GPA from Animal House, 0.0. But the odds of getting eaten by a golden retriever are never zero, so it's probably 0.0000 and a 1. Can JP Morgan go to zero in the next couple years? Of course it can. Will it? No. So ladies and gentlemen, you have the same risk as if you bought the 100 shares. But I'm not done yet. I never went flying in the F-18 Hornet, folks, without an ejection seat. I didn't climb up the ladder and say, hey, Chief, pull the seat out and give me extra gas instead. Why? Because that's the flight I would have gotten killed on. Wish I had my ejection seat. So I'm going to buy what I call a protective put or a disaster put. 20% under the current stock price. How did I pick 20? You ever see on CNBC, hey, the market's down 20% officially this morning. It's officially in a bear market. Or when they talk about an individual stock, Microsoft's down 20% from its highs. It's officially in bear market. 20%'s a round number. So here's what I'm going to do. I'm going to buy a put 20, what's that? 30 and 30 is 60, 240. I'm going to buy what I call a protective put or a disaster put around 240. Now, what happens? A couple things happens. The price of the trade goes up a little bit. Why? I'm buying insurance, man. I'm buying a protective put. So what else happens? I was risking 31 grand, over 31 grand. How much am I risking now? $9,900. If you buy 100 shares at JP Morgan, it goes to zero, you're out 30, whatever that was, $30,400. You do synthetic stock with a protective put on JP Morgan, you're only out 9,900. Would you rather lose 30 grand or at 10? Ladies and gentlemen, this is how you do this. It is so much cheaper and more effective to do this synthetic stock than actually buying the stock. I'm not done with this tactic yet. I'm cheap. I'm going to have somebody else pay for it. And remember, if you're trading on margin, you don't need the $9,900 in here. You probably need a couple grand to be able to do this trade. So a couple grand or 30 grand. But here's what I'm going to do. I can sell what's called a front. What's a front month call? You're sitting in the front month. January, February, March. I can go out to next Friday. Since today's Friday, I'll go out to next Friday and sell an upside call against this name. Look at this. If I sell a next Friday 310 call, I'm going to bring in $200. Look at this. I just lowered my cost basis, folks. And I'll do this every week. And this will eventually, the trade will eventually be free. It will be paid off. And that's not including JP Morgan going up in price, which obviously is going to happen in this trade as well. Ladies and gentlemen, this is how you do this. Do not spend over 30 grand to buy JP Morgan stock. Now, I'll brief you next week. There are certain things you got to keep an eye on. Like, hey, man, do not let the JP Morgan finish above 310 next Friday. You better close those calls. I'll talk to you about managing this trade. But if you hung with me for the past 10 minutes and you went, that's pretty damn cool. The guy just saved me $26,000. You're welcome. Send me a Christmas gift. Synthetic stock with a protective put. Okay. And let me show you something real quick. I won't sell calls against this, weekly calls, if it's on a tear, right? If the stock's just ripping like it was last month, I'm going to sit on my hands, put my boots up on my desk and drink my coffee and smile as I print money, right? If it's on what I call a gentle climb schedule, kind of over here. I mean, look at what JP Morgan does. It kind of goes on tears, up, down, tear, down, super tear, super down. So when it gets on one of these tears, I just sit on my hands and it profits. I don't have to sell those upside calls against the position. But look at this, folks. Look at a 10-year chart of JP Morgan. Let's just look at a 5-year chart of JP Morgan. It's a hockey stick. So I'm pretty damn sure by Jan of, 2028, JP Morgan's going to be moving up and to the right. No, it was Dece of 2028. Sorry. I think my position's out to Jan. They came out with the December of 2028 by now. So ladies and gentlemen, that was synthetic stock in a nutshell here, folks. And look at this right now. What did I tell you last week? It's a gift down here. Whenever it's gotten down to this 297.5, which it did last week, buy it. I also told you that in between these moving averages is death. It's trench warfare. This is no man's land. Stocks or indices these are magnets, these things. Either it's going to get pulled down to this 200-day or snap back up to the spaghetti up here, the 20 and the 50, and guess what it looks like it's doing? It's the magnet is to the upside here. Way oversold. This is a gift. Check out that synthetic stock on JP Morgan. I saved you, $26,000. Only chumps buy stocks, folks. Why would you buy a stock and come out of pocket that much? If you didn't follow that synthetic stock position, or if you did a little bit, you got to come to Full Throttle next week. This is what I'm going to teach you, man, is how to trade options. go.topgunoptions.com/full-throttle. And just like the motto at the real Top Gun that I went through, if you think you're good, we're going to make you better. So even if you follow that synthetic stock, like, oh, I get that because I'm an options Jedi, I guarantee I'm going to make you better, or at least give you a different way to look at things. Okay. All right, folks. Hey, make sure you are subscribed to our YouTube channel and you're signed up for the alerts so you can get videos like this as soon as they come out. And then also make sure you check out the Max Afterburner podcast. We just dropped a beautiful one yesterday. Max Afterburner is on Apple Podcasts, Spotify, Stitcher. It's also on the No Fallen Heroes YouTube channel. So go to No Fallen Heroes. Let me get this bar out of the way. There we go. There we go. Let me click on it. Sorry.
Yeah, we're walking
I got this stupid
through.
bar in the way in front of me. I need to set up my cockpit better. That's a debrief point for me. Go to the No Fallen Heroes YouTube channel. Subscribe to that. Healing with Psilocybin. We have a great podcast that dropped yesterday with one of our stewards and somebody who helps us cultivate our sacraments for ceremonies down here in South Florida. Okay. Again, make sure you register for Full Throttle Wiz. I can't join you Monday through Wednesday for an hour. That's about how long these live trade briefs are. Monday through Wednesday, 10 to about 11-ish, depending on what's going on in the market. If you can't make it, I'm going to get you access to the replay page. Okay? All right, folks. Went way too long, but I wanted to give you a little free info about JP Morgan and saving you about $26,000 trading options. Okay? Have a great rest of your day. Fights on. Namaste. And Basi. Wiz out.